Arvind, very good morning to you, and great to have you on the show. Would it be fair to say, all things considered, India is still relatively well placed? And the reason I say this is what Scott Bessent has said a couple of hours ago, that the US is waiving part, and this was part of the deal, that India can purchase Russian crude because it's important for India. Look at Iranian statements from last evening that they will not allow passage to US, Israel, and European ships, but will for India. So, relatively speaking, are we looking better placed?
Well, yes and no. I guess the question is, how do we thread this needle where they allow certain ships and not the others? The experience from the Red Sea when the Houthis were doing that is that they said they would allow ships, but only a small number of Russian ships were able to get through, and it was much harder for the broader, shipping fleet. So it'll be interesting to see how it plays out. I think I would be careful getting too optimistic. I don't want to get too pessimistic, but I think the key is Strait of Hormuz, because look at it from India's standpoint. Oil is one important thing, but don't forget natural gas. I mean, all the Indian ammonia fertilizer plants rely on natural gas coming from Qatar or elsewhere. So I think there are many reasons to watch this very closely. If this works out the way that it looks like it is doing, I think it'll be a big sigh of relief. But I remain somewhat ambivalent, given that this, war is continuing to take directions which are not entirely in anybody's control. So I think we should, hope but verify.
Okay, so there are positive signs, but you're not reading too much into it right now, Arvind. That's, I guess, what I'm taking from that. What would you say about the other fundamentals with regard to the Indian markets? Because there are certain pockets which are getting impacted at this moment because of sentiment which have nothing to do with the war. They're unlikely to be affected at all. And here I'm talking about largely the BFSI space, where some of the frontline banks are actually getting hammered a little bit.
Well, I think maybe that is more of a concern about inflation. If oil prices are going up a lot and people are worrying about what that means for, interest rate policy and everything else. So I think that there are so many secondary and tertiary effects. The best thing we can hope for is that this war ends quickly, because unless that happens, this is the most, I've been following the oil industry for over 35 years. This is the worst kind of crisis we have seen in a long, long time in terms of major supply off the market, 20% of the world's crude supply. So I think we have to be hopeful that this will end soon, but we can't assume that, the all clear has been sounded. But if we get the all clear, then some of the secondary concerns on things like BFSI will go away. But I'm not jumping in with both feet till I get a clearer idea. And there'll be plenty of time to buy once we get a clearer idea that this war is coming to a swift conclusion, or more importantly, whether the war ends quickly or not, the Strait of Hormuz is opening up for major energy supplies to move on.
Arvind, good evening to you, Neeraj here. Are you dipping your feet, though, even if you're not jumping in with both feet, or are you still sitting on the shores and waiting for some signals?
Well, we've been sitting on a lot of cash for a few weeks now. We're starting to dip our feet.
In India and across other markets?
In India and across other markets, we were more fully deployed, and this has been a little more painful. But in India, I think it's time to dip our feet. I think the Indian market has been such a laggard for so long, it's time to dip our feet.
Just very quickly, a follow-up there, Arvind. A lot of people have been saying about how Kospi, for example, or some of the other markets which have rallied quite significantly and valuations staying so sky high that 2026, once this is over, I mean, nobody knew about this, but everybody said mean reversion would happen, India would perform, some of the well-performing markets could come off. Now, the argument is about when this conflict ends. Now, assuming that it ends, whatever, in the next 2 weeks, 3 weeks, 4 weeks, or hopefully earlier, does that trade still play out? That India and some of the underperformers of 2025 do well, and some of the high performers come off?
I think it's hard to make that simplistic an argument, because look, the AI story is not going to go away because this war is over or not over. That AI story is still a backdrop, but I think the India growth story has started to re-emerge, India's own growth story, which is not just IT services, but a broader growth story. So that's the positive. The negative is if this lasts for 3 or 4 weeks, then some of the elements of that growth could get severely impacted for a few months. So I would say that the quicker this ends, the quicker we can get back to the growth story. But a longer dragged out could cause some near-term dent to that. I'm more on the optimistic side, but again, this war is a very unforeseen event in terms of how it plays out. So we have to watch and hope it clears up quickly.
That's, I think, the universal hope right now. Arvind, always a pleasure speaking with you. Thank you so much for joining us this morning.